Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. I'm going to try to do these as regular as possible. I'm going to actually put a reminder on my phone so I don't forget, and I'm going to try to do these in no more than 5 to 10 minutes in length. No educational, just a quick summary of what I see on Bitcoin for the day. I'm going to try to make a habit if I could do these every single day, Monday through Friday, just to help you guys out, at least for the day, on what I'm expecting for Bitcoin. And then you guys can watch it along and see if you like what you hear. All right, guys, so let's go ahead and dive into this. So here's the hourly time frame of Bitcoin. You can see yesterday we had a nice little bounce off that touch of the 100 EMA of the daily time frame that I was updating you guys on my Telegram. And we actually bounced first off the 128, then we came down to the 100 EMA on the daily time frame, and we did have a nice recovery, nice bounce off of that. We had a bounce, we put in a higher low, a higher high. However, I don't like the fact that on the hourly time frame we didn't we found this weakness here. We didn't put a higher low in a respectable manner. What I mean by that is, on a higher low structure coming off of a bounce, I typically like seeing two higher lows respecting the 0.382 and 0.50 fib. So what I mean by that is this bounce here gave us, you know what, let me take this off here just to make it look quicker. This bounce here gave us a nice bounce off 382. And when I see a bounce off of a downtrend, I'm looking for two of these continuous right there. And we didn't have that. We actually came down into 786. That shows weakness. That shows a lot of weakness, because typically this reload zone does not get hit until the third time. So we put in 1382.50 fib. Then we put a higher high, we come down, we put another continuation rule, which is a 382.50. We respect that. We can have a wick below 0.50, but a candle close cannot be lower than the 0.50 for that higher low to show strength, basically. And then on the third tap, that's when we come down into here. And that's something that I practice on a regular basis. And so I see it play out more often than not, and we didn't get that. So this already on the lower time frames, like the hourly time frame, is not giving me the confidence that I want to see for the bulls to start giving us some follow through. Doesn't mean it's over, but I just don't like it. So let me show you something else. Coming into it on a different time frame, like the 4-hour time frame. Now we are seeing a better market structure where we are respecting the continuation rule. So let me go here. Nope, excuse me. Right there. So we are respecting it on the 4-hour time frame. Remember, guys, on the different time frames, we're going to see a different market structure altogether, but they do start trickling into the higher time frame. So if you're going to get momentum picking up, you're going to see it in the lower time frame trickle into the higher time frames. I don't like the weakness that I saw in the hourly time frame, but it doesn't mean that we're going to drop and we're not going to recover. I go switch to a different time frame. Can I see a different view that may lend itself to give us that momentum, or at least that market structure that may lead us to that momentum to the upside? And the 4-hour does give me that. I will look at the higher time frames, the higher ones, in a minute to show you what I don't like, but I'm always going to give the benefit of the doubt to the bulls in a bull market. So I'm trying to find a bullish scenario, but I will also tell you and talk to you about the bearish scenario that we are currently in. But I will get there in time. The 4-hour time frame, you can see we are still respecting the continuation rule, so we do have a chance to put a higher low into here and then hopefully get us into that higher high. We do have a really nice fair value gap in here, right there, that I would like to see tapped in there. So I'm hoping that that this fair value gap does play out, and we get at least get a hit back in here, or fill this in would give us that higher low. That higher high off this higher low. Okay, now if you look at the 12-hour structure, I don't like it. All we see here on the 12 hours is just lower lows and lower highs. Lower highs and lower lows, all the way down. At some point, we're going to turn around, and when we do turn around, this is what I'm looking for. I'm looking for exactly what's going on here. So every bounce, I am treating it as a possible reversal. And every bounce has to prove to me that it's a possible reversal, which is what I did on the 4-hour time frames. But nothing is guaranteed. So obviously, if we invalidate this and we put a lower low, then we start over again. On the next lower low bounce, then I'm going to look for the exact same thing I just showed you guys for a possible higher low until we finally get that. Until we finally start seeing follow through on at least the hourly and 4-hour time frame. The hourly on this bounce proved to be weak. The 4-hour is still working on it. So we're not invalidated the continuation around the 4-hour, and the 12-hour. There's not much to say on here other than the fact that we're still in a confirmed downtrend. Now, the daily time frame looks no better. You can see it here. I'm going to do this now. I want to go ahead and turn on my indicators, my EMAs on the hourly time frame, and I'm also going to turn on the MACD, CMF, and the RSI. On the 12-hour time frame, as you can see, we are holding on to the 200 EMA. But more importantly, I've been looking and calling out on my free Telegram about the 100 EMA. When we were up in here, when we lost the 50 EMA, this was going to happen. I told you guys there's a 99% probability that based on this rejection here, that we were going to come down here. Because there's always a possibility when we break, it's a deviation and we reclaim. But when we have a second and third rejection off that daily 50 EMA, this was a 99% probability in how I view the market. Everybody views the market differently. Some people think the EMAs are useless. I don't. I use them. I trade off of them. I teach people on my Discord how to trade off of them. And it works for us, for my system. And right now, as you can see, we're holding on to a very key EMA. Doesn't mean we're going to bounce. Doesn't mean it's guaranteed to bounce. But at least it's a start. We have to start someplace for that reversal. I'm always going to give, again, the benefit of the doubt to the bulls. I don't like that the CMF is opening up again. As you can see, we had a nice bull divergence right here. If you look at the price action, we were coming down. You can see a little bit better here, right in here. You can see the price action was going down. The CMF was coming up, and right in here, look, we started deflecting back down. So we were on the right path, and that weakness that I saw on the hourly time frame, it's amazing. You can see it here on the CMF on the 12-hour time frame. That's this weakness right here. That's why it's important to look at all the different time frames, because they help you to put the story together. Doesn't mean it's over. It just means we need to see the bull step in and get us above these EMAs. Start climbing above the 7. Start climbing above the 200 MA. Start climbing above the 100 EMA on the 12-hour time frame. And if you're looking at the daily time frame, at least get me above the 7 EMA. Get me above that, and I'm going to feel much better. Get me above that. We get above the fair value gap that we saw in the 4-hour time frame. We start getting above a very key EMA in my system of trading, which is a 7 EMA for that support. You can see the support all the way up here. When we lose it, it becomes resistance. It's a very tough, and it's one of the closest EMAs to the price action that I use is a 7-day exponential moving average. But we need to see also market structure to help us develop that momentum and that proper disciplined move back up. To most people, this looks like just a bunch of lines up and down. There's a structure to it, guys. All of this stuff is measured mathematically. All these algos that liquidate people, that create these market structures, they're also done mathematically. If you know how to look for them, if you know how to measure them, you can see how well disciplined these moves are. This video is not for that. It's basically to give you the briefest update as possible. I'm already going into 10 minutes, so I'm going to cut this short. I was trying to do it for 5 minutes, but it's not going to happen because there's just so much information that I wanted to share with you guys. I don't want to just do a quick on the hourly and that's it. I want to give you a little bit of backstory just to kind of set the tone that yes, we are in a downtrend, but we're holding a very key EMA that can possibly turn us around. We did it here. We had a deviation here, but we were able to turn it around here. We were able to turn it around here. So I have to assume in a bull market that there's still hope for the bulls. Break this, get below it, reject it, and start following through on that rejection, it's a different conversation. It's a different story. And there are different markers that I'll look for if that happens. But right now, there's no point in talking about that. The only thing that I'm looking for right now is prove to me that the bulls are going to step in. And if it doesn't, that's a different video. All right, guys, hope this helps. And like I said, I'm going to try to keep this on a daily basis, no more than 10 minutes. This is 10 and a half minutes, but the intro was about half a minute. So hope this helps you guys. And I'm going to try to do this tomorrow again around the same time in the morning, my time.